What's up, guys? Bill here. Welcome back to another Watchlist walkthrough. If you're new to the channel, this is a weekly segment I do where I review my trading day. If you're a returning viewer and you haven't yet subscribed, please do it. Helps support the channel and makes it easier for you to find my content. Let's start off here talking about Carvana. This is a setup I've been kind of tracking and posting about on Twitter, but hadn't yet taken a position into today. And it came in as an inside day. Just one of the best, looking growth and squeeze stock charts that I see on the market. And I've been waiting for rates to take a breather. All it takes is a day with a name like this to get a big pop. And that's what we got today. And no better way to play it than an inside day, right? So you can see here clearly on the daily, the inside day, and it's coming up against this downtrend line on its third or fourth, however you want to look at it, test of it. The more we test, the more likely it is to break out. It's got great support there in a supply zone, and it's got a lot of volume there as volume shelf to sit on as well. But let's go down to these smaller time frames because we got to see how we're going to execute this play. This is an inside day that it's gapped up over the level in pre-market. And so we're going to look for the retest, okay? And a name like this, a setup like this that I'm really kind of gung-ho to get in, I'm just looking for the pull and touch of the level. Maybe even doesn't have to touch, but close enough to where I'm getting a legit retest and I can get in, okay? And that's exactly what we got here. We barely wicked below the level, and then it just ripped up to 47, where we had some positive gecks. This was where I took my first major scale. My next and basically end of day or end of position type target for the day would have been 49. We didn't quite get there, so I scaled heavily again at 48 area. I always talk about this when I have big levels with gaps in the middle. What I try to lean on is psych levels in the middle, even 50 cents on a cheap stock like this. So, you could scale at 47.50 and then 48 and 48.50 if they gave it to you, but they didn't. I ended up getting out a ton here, and then having runners, just mostly out of the position, but a 200% win on Carvana. And just a textbook inside day breakout, retest, and go. Okay. It doesn't get much smoother and stress-free than that. Let's talk about Palantir, another great trader today. This was an episodic pivot setup. If you're unfamiliar with episodic pivots, I recently released a video on them. This is my favorite off the open technique right now. It's absolutely on fire. This is the 7th time I've played it this year. 7 for 7 with a win average of about 100. It's probably more now because of Palantir today. Over 100%. I'd have to go back and do the math. But just insane, okay? And this one, I was even a little apprehensive to play it, so I sized smaller because of how much it had gapped up already and how big its float is. So if you haven't seen the EP video, episodic pivot video, definitely check it out. I'll put it at the end of this video. You can click and check it out. But essentially, we're looking for stuff that gaps up very huge and has a change to its story, a change to its situation. So Palantir, we can see that over the last couple months, it's been relatively weak compared to the broader market. And it beat earnings, had really great earnings, really great guidance, and gapped up 20% on that and out of this downtrend. Okay, so that's going to get people excited, right? A stock that was kind of beaten down, has kind of a bit of a cult following as well, and gets a big gap up like this. And, like I mentioned, the reasons I was a little apprehensive about playing it was how much it was up already. It was up already, 20%. This 20 level was big. Okay. It gapped up over that. I wasn't sure how far it could go. I've seen it go 25 or so % in a day on earnings before. It's up 30% right now, as we only have about 10 minutes left in the day. But let's talk about how we execute these. Really simple on the execution. You're going to use a 1 minute opening range. Okay, so the first 1 minute candle, you're going to mark the high of it. That's your entry. And you enter as soon as a candle pushes through. It doesn't have to close or anything like that. And at the time that you enter, so you can see it, this candle here, this is where we push through. You're buying calls here, okay? Your risk is wherever low of day is at that point. So at that point, it was here, 1976. All right? So you're opening yourself up to about 70 cents of risk here. It's decent. That's a decent sized risk. But as you can see, based on how far we ran today on Palantir, that 70 cents risk is more than worth it. Where did we top out? 22.18 on Palantir today. So $1.70. So well over a 2-to-1 risk to reward, about 2.5 on this play. And this was one that I thought maybe would have a little bit less likelihood of really extending further based on those factors I mentioned earlier, how high it had already gapped up versus its history of moves on earnings and how large its float is, over 2 billion float. But you can see here, really smooth. Okay, so you enter on the push over opening range high of the 1 minute candle, and you're just scaling at targets along the way. 21 was a positive gex. That's a big spot. My next big target was this weekly pivot. But again, when you have big gaps in between your levels, you got to work in some other ways, right? So 2150 is a place I took profit right here. And that's right where we rejected. So, you work with what you got. If you're really worried about risk on a trade like this, and I can understand that it's a momentum entry and, it's something that's gapped up. A lot of people feel like they're chasing but that's kind of the beauty of the play. A lot of people are too scared to play it. And you can turn on these EMAs as a way to feel out the move. So you can see here that once we're in, we're already getting one nice scale at a target. We come into the 9, we bounce again. We're getting closer and closer. Now I've already got 2 nice scales on the target. We still haven't lost the 1 minute 9 EMA. If you're worried about, pulling all the way back down here, you could maybe say, okay, well, maybe I'll cut if we lose the EMAs, but we're coming back. We're retesting this positive gex. I'm not going to sell there. Look, now we get another leg up and we're to our third target of the day. At this point, I'm out 90%, just runners, break even stop. And people might scoff at this whole 1 minute opening range, right? It kind of sounds insane. You're going to play a 1 minute opening range. Well, look what happens the first time we test the breakout. Retest it, I should say. Breakout here, rip. First retest of the 1 minute range, hammer. And then a grind to high a day, right? I mean, it's insane how well this works. Okay, guys? And I'm playing this a little different than the person who created this setup, Pradeep Bandi. I don't know how to pronounce it, to be honest. He looks at it more like a longer term something. He plays commons and he's going to hold for weeks, right? Sometimes. And he wants the stock to make like a 50% move in the next month, in the next quarter. I'm sure that's great. I'm trading day trades on it. All I need is one big pop over this level like we got today. Even to 21, calls were already up 50, 60%, right? That's I'll take that trade any day, but I mean, it's several hundred up here. Okay. So that's the episodic pivot. It's now 7 for 7 since I posted my video on plays this year on the episodic pivot. It's making my year already, some of these trades. Okay. Next, let's talk about Amazon. Amazon was one of my top watches coming into the day, posted on Twitter last night. Inside day. Let's check it out. Inside day with a big hammer. After a peg, power earnings gap. Hammers down at the gap entry level and closes near highs. Very bullish looking candle. So I was very excited for upside move on this today to break out of the inside day, even though we are quite extended. All right. There is some downside to that. But let's look at this play and let's talk about what happened here. Okay. We come up off the open, strong candle. There's two reasons why I didn't trade momentum breakout on this trade. You'll see in some of my other videos on inside days, sometimes I will just trade the momentum breakout, especially if it's something I'm really high conviction in on a play like this. But I didn't today, and here's why. Just above our inside day high, which is your call trigger, we have this weekly pivot. This is a major level. And weekly time frame, bigger than daily time frame, right? An inside day, that's daily time frame. This trumps this, okay? So if I was going to play a momentum breakout on Amazon, I would at least need to see price push through here. Just like we watched price push through the 1 minute opening range high for Palantir. That's what I'm looking for on these when I trade them. But I need to see that push through here at least. It didn't even get there. It failed the inside day breakout. The second and less important reason was we didn't really open that close to the breakout level. We opened $1.15. That's a lot. Okay. In my opinion, when I'm playing these inside day breakouts, I want price to kind of open like here, you know, and then I'll play it on that push through. Okay. So it failed here and it sold off. Some people might ask me, well, why not short it there? Well, because I came into the day with bullish conviction on this stock. I don't like to trade against my conviction, so I don't short there. It would have worked really well, but it's process over results. And I've found that I can get a way better edge by playing these inside days with a thesis and playing the range if I need to. So playing the range, what does that mean? Well, I'm still bullish. I don't care about this sell-off. One day of selling doesn't make me flip a thesis on a stock. What it does is make me patient and wait till it comes to somewhere where I am going to be interested in buying it. Where is that someplace? The day's low from before. That's our inside day range. These levels are really well respected. We saw the respect here. It shoved it back down. There was no confirmation. It trades all the way back down to the bottom of the range and holds right here. This is where I get in. Okay. And it takes a little minute and we got to double bottom a bit, but then it's just relaxing, chill, $2 move, back on weeklies. That's 60% on the 170C weeklies that I traded. I traded the 170 because I thought that was a reasonable potential target by end of the day. And it's just as simple as that, guys. These inside days, you can play the range when you have a thesis. You don't have to chase the breakout if it's not an ideal breakout setup. And it was not an ideal breakout setup on momentum for the reasons I stated. Really near proximity, higher time frame level that's going to act as resistance. And we opened too far away from the trigger. Okay, we opened almost in the middle of the range. All right, that's Amazon. Now, let's look at an example of where I would go short on a name because of playing the thesis on an inside day. My favorite setup, short setup of the day was KRE. Okay. Double inside day. Let's look at the daily. Here's your inside day from 2 days ago. Here's your double inside day. Tons of consolidation. Weak name lately. Rate dependent name. And let's go back down to our 10-minute and let's look at how to play this setup. It's just like Amazon, except I'm bearish on this name, right? So I'm way more interested in when I see a candle like this, a failed breakout, a wick and close over, you could call it a gravestone doji, whatever you want to say. That's a great entry for a short, right? And what does it do? It trades all the way down to the bottom of the range and even bounces, reiterating the fact these levels are very reliable on inside days. And this is a double inside day. So even better, even more consolidation leading to a breakout. You could take this short entry here, be scaling heavily here because you've already got a good move. And then if you get the actual inside day breakdown, that's just cake at that point. I mean, we get some support from this positive GEX at 47, a bunch of chop. It breaks down, makes another low, comes back up, breaks down, makes another low. I mean, at this point, you're up 100% on your call or puts, and you're just being patient. Take profits when you're happy, right? Maybe even swing some overnight, depending on the type of contracts you bought. But it's just, you know, really that simple. Playing the range with a thesis. So you don't need to try to, you know, buy calls here just because it's an inside day coming down to a low. If you're bearish on the stock, right? You get in puts at the top, write it down. Everything else is gravy after that. All right. And finally, let's talk about SPY. What's crazy today is, you know, there was all these great setups, right? I'm going through all these trades that worked really well. Then you look at SPY and it's a complete chop fest, and people might be saying, man, today sucked. Today was hard to trade, the price action and everything like that. And, it just depends on the types of setups you know, the types of setup you trust, and what's being presented to you, because I found a lot of great setups today, even though SPY traded in a sub $3 zone and was pretty choppy. And there was even some great trades on SPY, which might seem strange, but let's talk about them. Okay. The first major setup on SPY today, for me, is the glory hole. Glory hole is a setup that I came up with that's a combination of Fibonacci retracements intraday and fair value gaps, FVGs, or imbalances, whatever you want to call them. So what I'm looking for on these setups is, first you need to find a nice FVG. We have that here on the 10-minute, right? Boom. Look at that candle. Very nice. Creates an FVG. Like this. All right. Now we need to draw our fib. This is a leg down move. So we're going to draw a fib down. Okay. The glory hole happens when your FVG sits in the golden zone, which is the area from the 50 to the 786 of your Fibonacci retracement. You can see that's exactly what we got. Where you enter is up to you, but I like to use the fibs as kind of the leader of this setup, and the FVG is the extra confluence and conviction and extra helper, right? So 618, this is where I get in on my fib intraday trades for the most part. It can change if the range is way bigger or way smaller. I may need to get in a little later, which is a push over, or a little earlier. It just depends to keep my risk in check. Okay. But today, with this size range, I was cool getting in even a little earlier than I did. I got in right before the 618, and we got a nice dollar flush down. And it's just $1, but the whole range of the day is only $1.30. So that's a huge move. And on zeros, they went over 100%. But we didn't even really fully fill the FVG yet. And that's what makes the setup great, is you have the 618, which is often respected. And then you have an FVG that, if it fills, is going to more than likely bring in more selling pressure. But they give us round 2 here, and we get up more towards the top. And basically at this point, I would consider the FVG filled, getting up to that high through the gap. That's pretty much a gap fill. And look what happens as soon as we do that. The nastiest candle of the day, right? And price took so long after that first flush just to get back up here. And then in one candle, it was all wiped out again. And as you can see, all these great scalp opportunities, bulls were doing their thing. They showed their hand a little bit in pre-market, and they just kept buying down here in this 50-cent zone, with pre-market low being your bottom and the previous day's closing price kind of your top. Every time price dipped in here, yeah, it might have took a little longer to get worked back up than it did to slam it back down, but they kept buying it back up in this window of strength and filling FVGs, right? So FVGs work both ways. We played it to the short side on this FVG, but here's another way to play it, is to target calls to go back up and fill the FVG. I didn't do it this early, but once you start seeing this pattern where they're buying everything up, you can start scalping calls off the bottom to fill that FVG. Right? This creates an FVG, you mark it, start to see buyers stepping in these wicks, go fill it, okay? Price starts to melt back up. Again, it's taken forever. We come up, we fill that FVG from before, sells off. Buyers step in. It creates this FVG that's basically opening range low. What do? Go fill it, right? I mean, it seems crazy, but in these choppy conditions, if you're getting price action like this with big sells or buys in either direction, but it's limited in a range here, those FVGs are your best friend. They're gonna fill more often than not. And when you can get entries to target those fills that you can see are reliable after these wicks and that move back up, and especially after this, maybe you didn't even play that one. That third time, you better be thinking, okay, if the price comes back down here again after I saw this, I'm going long off pre-market low and we're going to go fill this FVG. So you're not going to catch all of them, but the longer you sit and watch, the more conviction you can get, the more data you have to make a more sound decision on your scalping. So if you do want to sit at your computer all day and scalp SPY, if that's your thing, I mean, I did it for an entire year, you can do it. And that's how you do it. All right. Hopefully that helps, guys. If you have any questions about anything I discussed in this video, just leave a comment or find me on Twitter and I'll help you out.